We've got all the panelists on board, and I'd like to welcome you all to the third in the Business Resilience series. Appreciate everyone taking the time this morning to join us. We have about 90 folks registered for today's session. I think we have a number of you that have joined already, and people tend to come and go a little bit, so I think we'll get underway. My name is Jeffrey Boutilier. I'm the president of Ascent Strategy, and we have put together the Business Resilience series along with some great community partners to try to provide some additional assistance and advice and insight to businesses as they navigate this unprecedented public health situation that we find ourselves in. Today, we're looking forward to shifting gears in our conversation a little bit after a brief one-week hiatus. Those of you who have joined us previously will know that our focus to date has largely been around helping folks respond to the immediate crisis, securing relief, accessing programs, getting their cash flow in order, that sort of thing. And we're going to review some of that material today to make sure people stay up to date on what's available to them. But we're going to shift our focus and our panel to an exploration of how some businesses in town that many of you probably are familiar with have been working through this situation. And I think more importantly, how they're starting to prepare for an eventual recovery. So we'll be touching a little bit on the Reopen Saskatchewan plan that Premier Moe announced last week, and working with our panelists to explore what that means and what businesses should be thinking about as they look forward to hopefully getting back to some new normal here in the weeks and months ahead. First, a little bit about the Resilience series. It's a community-driven initiative. As I said, we have some great partners that help make this possible. I'll mention them all to you right away. It's all volunteer, so what's really important is all of our panelists and all of the folks that work to produce this content are volunteering their time and energy, as everyone will appreciate with devoting a couple hours of your day in the middle of the week while these folks navigate their own business issues is pretty special to us, and we were very grateful for that. Also grateful to some of our returning panelists whose time commitment is getting up near the double digits here, and I'm looking at Craig Reed specifically. And we have really one singular goal. We're here basically just to help businesses navigate the challenge, nothing more, nothing less. And what makes this exercise worth doing for those of us that are contributing our time, and what makes it valuable to the folks that attend, is basically the participation of our audience out there. And that's going to be especially important today. A lot of the time we have a lot of things to talk about that we've sort of mapped out in advance because we're talking about government programs. There's a lot of detail to explore. Today we have a panel of business owners that are dealing with a lot of the same things you are. And we really encourage you to start thinking about what questions you might have for them and some of the things that are on your mind, because there's a lot of advice and a lot of collective experience on the call from a range of industries that I think could be quite special. So to do that, you're going to be using the Q&A function in the Zoom toolbar. So if you might have to wiggle your mouse a little bit to get it to reappear. But you'll see that there's a Q&A function there. And basically what that allows you to do is table the question to us. The panel will be able to see it. And as we start our panel discussion a little bit later in the morning, we'll be able to address your questions as we go. So the more of those we see, the better. The other piece is that it only works if we have good attendance. And I see that we already have some pretty strong attendance this morning. The more that folks that find this information valuable can do to help us get the word out and connect it with other business owners, the better this will be, and the longer we'll be able to keep putting these things on. The hope is certainly to keep doing this as long as we find ourselves in these extraordinary times. I mentioned earlier that we have a great panel, or a great group of community partners that help us put this on. My organization, obviously, Ascent Strategy, the Regina Downtown Business Improvement District, PATH Cowork, Economic Development Regina, and Regina's Warehouse Business Improvement District. So those folks are instrumental in helping us assemble great panel guests, helping us communicate the series and get the word out, and we're grateful for their support. All right, let's dive right in. So in terms of today's agenda, I mentioned in my opening remarks that we're looking at a bit of a pivot from some of the earlier sessions that you might have participated in. We wanted to give you a bit of an update to the Business Resilience series and an introduction to what it is. I think we've accomplished that. I do want to note that we have two upcoming sessions coming up here. We have one next Tuesday. We've got a great panel of business owners coming together for that we look forward to sharing some additional information on in the days ahead. And we also haven't quite nailed down a date for it yet, but we are working right now to put together a session specifically focused on the restaurant and hospitality industry. Obviously one of our harder hit industries, and those folks are facing some particularly unique challenges when it comes to reopening. especially given that once they reopen, they're looking at some significant capacity restrictions in terms of how they can operate their facilities and what services they can offer. And it'll be quite interesting, I think, to do a deeper dive into some of those considerations. So again, keep up to date on resilienceseries.com. Great place to see where new sessions are coming up and sign up for those, and get on our mailing list as well so you're aware of new ones. We'll introduce our panelists in just a moment. I'll have Craig Reed join me in what has become a very popular stop on the Business Resilience Series agenda, and that is a review of some of the relief measures, and we'll answer any questions folks out in the internets might have about those. We're going to start our panel discussion with a bit of an overview of the Reopen Saskatchewan plan, just to make sure everybody's familiar with what's currently being contemplated. Certainly one thing that we're really encouraging folks to do is to go acquaint yourself with the full plan. It's certainly in some respects light on details, as you would expect, because some of the later phases are really subject to how well the earlier phases go. But there is a plan out there. It's about 35 plus pages long. It's a pretty light read. What we're a little bit concerned about right now, and perhaps this is a bit of a personal plea to folks who've joined us this morning, is that in light of Premier Mo's comments last week, it sort of seems as though people really want to hear the things that they hope to hear. And you've seen headlines this morning and in the Leader Post that social distancing practices around the lake this weekend weren't maybe as good as they had been previously. And I think a lot of folks have interpreted some of the relaxed restrictions that have been proposed as perhaps a full reopening or a full reduction in some of those measures, which is obviously not the case. So really request that business owners take the time to look through that thoroughly and really understand what it means for them, and then even on the personal level, what it means for your families. And as I said, we'll get into our moderated panel discussion. So before I introduce our panel, I just would like to protect them from any liability with the standard disclaimer here. So this is a volunteer effort to provide the community with information, analysis, and access to expert opinion at no cost. New information is obviously emerging daily, situations rapidly evolving, and every business situation is going to be different and unique. This webinar series and any recordings thereof is provided for general information purposes only and does not constitute legal or professional advice. And we indicate that no user should act on the basis of any material in this webinar without obtaining professional advice specific to their situation. So thank you for indulging me with our disclaimer. And now I'm going to introduce this great panel that we have today, and we'll dive right in. So joining us first here is our returning panelist, Craig Reed. Craig's a partner at Virtus Group and has been contributing now on every session that we've run, and has a great perspective to offer on the financial side of things. Good morning, Craig.
Good morning, Jeff. Thanks very much for having me today.
Thanks for coming back. Glutton for punishment.
Yeah, people are sick of me already, I'm sure.
We're also joined by first-time panelist Kevin Stricker, who is the CEO of Fries Tallman Lumber and has an active role in a number of other businesses and community initiatives. Kevin, maybe I'll have you just introduce what your company is all about.
Sure. Well, good morning, and sorry for the delay. I'm not that technically savvy, so and my IT lady's working in her basement these days, so bear with me here. Yeah, so Fries Tallman Lumber, we've been around since 1956. We occupy the corner of Broad and Dewdney, proudly serving Regina and southern Saskatchewan for 60 some years, and continue to do that for many more to come. So happy to be aboard, and hopefully I can help with the dialogue today.
Thanks for joining us, Kevin. I'm always a little bit humbled when I think, having made it 7 years is a noteworthy achievement, and then someone tells me that they've celebrated over 60. So congratulations on that.
I'm not quite that old, though.
We're also joined by Kirk Morrison, who is the CEO of Krugo, an interesting travel app startup tech company. Good morning, Kirk.
Hey, good morning. Thanks for having me. Yeah, for those who don't know, Krugo, we're an early stage software company based in Regina. I'm also a partner of another technology company where we do custom software development for folks. So obviously being in the travel sector, this is going to be an interesting ride for us, and happy to be part of the conversation today.
Thanks, Kirk. We're also joined by Sean Steffen, who is the president of the Rusty Shovel Landscape Shop, and his exploits have included providing my yard with entirely too much rock for me to haul, and we're pleased to have him join us this morning. Good morning, Sean.
Morning, Jeff. Thanks for having me.
We're also joined by Dave Sullivan, who's the Chief Operating Officer of Global Ag Risk Solutions. Good morning, Dave. You want to tell us a little bit about Global Ag Risk and what you're all about?
Good morning. Thanks for having me. Yeah, Global Ag, we're a private crop insurance company for grain farmers. We've been around for about 10 years now, working out of the Manitoba, Saskatchewan, Alberta, and 37 states in the US, insuring grain farmers' revenue against wind, hail, snow, drought, locusts, whatever happens.
COVID and locusts. It truly is signs of the end of days. Thanks, Dave, for joining us. And I introduced myself previously. I'm Jeff Boutilier. I'm the president of Ascent Strategy, and we are a business advisory firm focused on growth strategies. And lately, we find ourselves less preoccupied with helping companies grow and more preoccupied with helping them reach the finish line when it comes to the pandemic. So we'll open our day, as we always do, with a bit of a recap and a review of relief program developments. Happy news, actually, I think, from my perspective, and Craig's going to join me in this conversation, and I'll certainly welcome his comments and perspective. But for the first time in a long time, it seems as though there's been fewer announcements and more detail, action, and application. So things have started to move from the conceptual, hey, we're going to help out businesses, to a little bit more of a practical rollout of programs. There's obviously still been some new announcements, particularly around rent relief and other funding for folks that don't necessarily qualify for the more one-size-fits-all relief measures. But we'll go through a quick recap here, and certainly encourage any questions from the audience about specific details that Craig or I can try to help out with. So the first program we'll touch on really quickly is one that I think most people are intimately familiar with right now, which is the Canada Emergency Business Account. These are those $40,000 loans that $10,000 of which is forgivable if they're paid back within a certain time frame. There's been a bit of a development here that I think will be a welcome news for some folks that were just on the margins of being included in this program previously because their payroll didn't fit the limits. It used to be 50,000 to $1 million had to be your payroll for 2019 in order to be eligible for the Canada Emergency Business Account. We've seen those relaxed recently to 20,000 and 1.5 million respectively, which should scope in a number of businesses that were excluded previously. Folks on this call will know that at the low end, if you were kind of a one-stop shop, it might have been difficult to hit the 50,000, and certainly many businesses hit that million number very quickly as their companies grow. So this provides a little headroom there. Many businesses have reported that they've successfully applied and have received the funds. The application process has been really wonderfully streamlined and straightforward, which has been really great. You really only need your T4 summary information and to make some basic qualification to get your funding. The funding has been hitting bank accounts within about a week or less, which is pretty great. One quick caveat to remember there is just not to forget to consider the tax implications of this program when you're completing your projections. So one thing in particular that I know some people I think have overlooked is that the $10,000 forgivable element of the loan would in fact be taxable if you had that piece of the loan forgiven, if you paid it back fast enough. And these are just things you don't want to lose sight of and end up with an unexpected tax bill later in the game. Craig, anything to add in terms of developments around the emergency business account in the last couple of weeks?
One of the caveats on it that when you attest when you're applying for it is that you're going to only use it for operating expenses or normal debt retirement. So you have to be a little bit careful that you're not taking the 40 grand and putting it in the stock market because you think things are going to bounce back and you want to play it that way. It's only for sort of normal like operating expenses like payroll, paying your rent, all those sorts of things. So there's questions about, hey, how are they going to do? I need to keep a really good paper trail on that. And we don't think it'll have to be to a T where you track every single penny that you've spent this money on, just as long as you're not doing anything egregious on it. And unfortunately, for those that aren't paying wages, this does not apply to them. So if you compensate yourself via dividends or you're a sole proprietor, this program doesn't help you at all, really. So that's the only real downside with it. We haven't heard any rumblings about expanding it to include that once they expanded the range of qualifying wages for it, unfortunately.
Yeah, to that point, it's still difficult for sole proprietors out there in a lot of situations. We'll maybe loop back to that after we go through the review of program developments and chat about what some of those folks might be able to access. Mm-hmm. The other program that I think folks are pretty familiar with, not really a program specifically that you can apply for, but the program that's offering funding to a number of the initiatives that people might be trying to access, is the Business Credit Availability Program, the BCAP. This is essentially a significant tranche of funding that's been pumped into Export Development Canada and BDC primarily to free up new credit facilities and extended terms for existing borrowers through those agencies. The one thing I would indicate here based on what we're hearing out there is that the apparatus to administer these things has been inundated, it's been totally flooded, and it's not necessarily scalable to the level of application activity that some of these organizations are seeing. And as a result, the application process has been pretty opaque in a lot of cases. We've heard scattered musings from some of our clients that they'll have received a notice that they had a hard credit hit where someone checked their credit, but they hadn't even heard that their application had been received by anybody yet. So things are sort of going on. I haven't heard directly of too much information of folks accessing new credit. I'm curious if any of our panelists have. But the big message here, as we've been saying for a long time now, is that if you need additional funding support through the crisis that doesn't come in the form of one of these, CEDA loans or something like that, the earlier you get yourself into the pipeline and the earlier you are in that sort of queue, the better off you're going to be, because I think the money will come and there's lots of it there. But the processing for these loans seems to look a lot more like a traditional loan underwriting process. There are still personal guarantees involved, et cetera. And the process of evaluating your suitability to receive additional funding is still fairly complex, as it always has been. Craig, anything to add?
No, I would just echo your comments. It's been this one's a bit of a slow mover and has had the least sort of beneficial impact because of the delays in the apparatus. So.
The next one, and one I think a lot of folks were pretty excited about when it was announced and have spent the last couple of weeks trying to assess how eligible they might be, is the Canada Emergency Wage Subsidy. Now, this is actually a pretty good news story as of now. The applications are finally open. The federal government reported that they received about 30,000 applications in the first day, which was yesterday. And they are expecting that the first dollars will hit folks' bank accounts if they're set up through CRA for direct deposit by May 7th. So we now have some clarity on when the application is going to be available. It's available. And we have some clarity on when money is going to hit accounts. So May 7th for the folks that applied yesterday, provided they don't run into any oddities in their application. Just a quick reminder, this is one that most people I think are going to be quite interested in. Subsidies, subsidizes billable wages up to that 847 per week number, subject to the revenue drop requirements. There's 12 weeks of benefit that are available. The qualification model is one where if you qualify for 1 month, you're automatically qualified for the second. So if you qualify for relief in March, you'll receive the subsidy in April as well. If you qualify in April, you receive it for May. If you qualify in May, you will qualify for just 1 month because it's the end of the program. It's a retroactive credit. So if you apply a little bit later in the game, you can still claim back to the beginning of March, which is great. It's offset by any of the temporary 10% wage subsidy you may have qualified for if you're an eligible small business. So you're not going to be able to double dip, obviously, which I don't think any of us expected. And the process for application is, I wouldn't say it's as simple by any stretch as the CEDA loans, but it's probably not as bad as it could have been. It's not great. They may get better at it as time goes on, but it does seem fairly flexible. Craig, go ahead.
Yeah, the CRA spreadsheet that they have online, it is a really useful tool to calculate your available subsidy. And when you're applying, you're only going to punch in the summarized number, not by employee. So they've made it applications relatively easy, similar to how they did with the CERB benefit and things like this. It is easier to apply, but there's a lot of work that goes into the back end before you can punch it in.
I think another piece here is that keeping good records is going to be critical as well. I mean, there's lots of sort of thinly veiled warnings from the federal government that folks that abuse the program will be subject to significant repercussions. The challenge is they have provided quite a bit of flexibility in terms of how you can calculate your income to qualify using cash basis or accrual, et cetera. And I think it's probably worth advising folks at this stage that if your situation is anything other than completely black and white, you're probably going to want to reach out to somebody and also make sure you document all of the assumptions and the work you've done to calculate your numbers, because it's quite likely that at some point in the future, the CRA might come looking for you to explain how you arrived at your conclusions that supported your application. Craig, any thoughts on that?
Yeah, I think the backup and support of the calculation is going to be really crucial to keep and be comfortable with. There were rumors going around that they were going to be auditing 100% of these claims, which I don't think is very practical. I can't imagine that's actually going to happen. But if you're over a certain dollar amount, then likely you're going to get looked at for this, because it is a pretty big amount of money coming out of the public coffers to help businesses right now. I guess, Jeff, can I just throw a few clarifying points on it that are maybe important for people? The 10% wage subsidy, the initial thought was that if anything you've received would reduce your benefit, and the wording on the agreement or the legislation seems to say that if you were available to get the 10% subsidy, you have to reduce the 75% by that amount, and therefore you'd have to claim the 10% if you haven't yet. So we had a lot of clients that were not going to bother with the 10%, waiting for the 75. It adds a little wrinkle. The 10% you can claim even as late as on your T4 summary, then you file in February of 2021. Sorry, so it's not the end of the world, but it does impact things a little bit. And if you're selecting cash or accrual, you have to use that method for the entirety of this program. And if you're selecting your comparison period to either the month in the previous year or to January, February of this year, you have to use that same comparison period for the whole program. So those are two decisions that you have to make that'll be applicable for all your periods. So if you're uncertain and you can afford to wait a little bit, you may want to wait to apply until you know that you're going to be choosing the best method, because you have till the end of September to apply for this subsidy. So if it's in doubt, you might want to wait. And if, for example, we don't know how May is going to land yet for a lot of folks, the soft reopening in Saskatchewan for some businesses may mean that they're open, but really not making much revenue at all, depending on the restrictions that are lifted. So I know it's hard to really stomach paying out the wages, not get the subsidy, but if you want to maximize it, you could wait. That's the sort of cautionary tale we're giving to clients right now.
I have two follow-up questions, Craig, that I haven't been able to find answers for, and I'm just curious if you and your friends at Virtus Group have discovered anything. The first is, when businesses become eligible to reopen, if they were to choose not to, because either they feel their revenues wouldn't be worth it, so to speak, to rehire, et cetera, once the government indicates that it is legal to operate again for those businesses, would their qualification criteria be impacted if they elected not to do so for other reasons? Is there going to be an expectation that once you're allowed to reopen, you're doing all you can to generate revenue to stay qualified?
I'm not aware of anything in the program criteria that would mandate you try to open and do your best, so that it's really just a revenue test. So if you choose not to open, I mean, if as a business owner, if you choose not to open and you're still paying wages to be able to get this subsidy, then obviously you're incurring some significant costs. Most likely your decision's made on the safety of the employees and your team. So, or just based on, hey, I can't, if my restaurant can only open and half the tables are full, then I actually can't make that a go. So something as an example. So I'm not aware of any restrictions there, Jeff, that would prevent you from getting the subsidy if you chose not to open the doors once the soft restrictions or soft reopening was allowed.
All right, and then my follow-up question to that, or my second question was, we know in the United States with the small business loans that were announced, there was a whole bunch of hubbub around how fast those were oversubscribed, and the money that was approved sort of ran out.
Shake Shack got a real
Shake Shack, the Los Angeles Lakers, I heard, got $4 million that they've subsequently returned. But given that money was oversubscribed right away, the second tranche was announced and supposedly is already oversubscribed as well, I think there's some concern that, okay, I can wait to apply for this wage subsidy until much later, but given that there's a lot of interest in it and there's an approved budget amount or in the legislation that's contemplated, can this program be oversubscribed and run out where my claim would be denied because there's no money left in the jar?
Yeah, sorry, I should have commented on that. That's in the States, they can only apply up to certain, they sort of when they approve legislation or a program like this, they approve a certain amount of funding. In Canada, that's not how the framework works. So in the States, only 3 pies were brought to the party, and if you didn't get to the table early enough, you're out of pie. In Canada, there's enough pie for everybody to go around so long as you qualify for the program. So it's comforting in that way that, I mean, it's just it's a difference in how our legislature works here in Canada compared to the US that is obviously favorable for us up here compared to, and makes more sense, obviously. It is a good bet though, like a really positive thing for Canada that way.
I certainly think it's fair to say that the Canadian response to COVID-19 has reminded us that we should be grateful for some of the way things get decided around here.
Yeah, could always be better, but certainly it's better than some other contrasted things.
This is true. The
Jeff, before we move off of
yeah,
the
go ahead,
75%, I wanted to, one thing that I wasn't aware of initially that's become clear now is your baseline wage calculation, that the normal wages you're paying from January to March 15th are really important for both arm's length employees and for non-arm's length employees. So non-arm's length, there's someone that controls the business, or a direct blood relative of someone that controls. So non-arm's length wages under the subsidy, they're limited to whatever your baseline compensation was in that period. So that's useful. Like we can't just put our cousin and our wife or our son or whatever on payroll as of April and get the subsidy for them. But if they were normally being paid from January to March for duties, they can get the subsidy related to this. But for arm's length employees, where it's really important on the baseline comp is if you're paying them a reduced amount. Let's say that there's not enough work for them to do, or you told them not to work, they're on furlough or whatever what it's called, and you're paying them a reduced amount of their salary. If their baseline comp is high enough, even though there's that 75% test, so long as their baseline comp times 75% was over that maximum of $847 a week, then you can get more than 75% of the actual wages paid. So if the employee's baseline comp was normally $2,000 a week, then they would 75% that would be $1,500. And if their actual pay each week is only $847 exactly, you can get 100% of that wage subsidized by this program. So that's only really applicable when you've got the employees on a reduced pay because they're maybe not able to work fully, or you got them on furlough. And if they're on that sort of program where they're paid to stay home and not do anything, then you can, as an employer, you get a reimbursement of your EI and CPP that you're paying on that employee's wages. So those are two little wrinkles where they're trying to motivate employers to keep people on payroll even if they're not working. But it wasn't. I thought the 75% test was applicable to everything, as opposed to you can get up as much as you want.
Given how many
up to 84.7. Yeah.
I was going to say, given how many folks are likely in a situation that mirrors that, I think that's actually quite interesting. I wasn't aware of that. So that's good advice for folks out there that may have furloughed some employees, that your qualification criteria is likely a little different than you may have assumed.
Yeah, the CRA spreadsheet calculates it pretty well. It accurately calculates it, and it throws off some numbers that might surprise you if you weren't aware of that. That's all.
All right, well, let's shift gears really quickly to the 10% temporary wage subsidy. As Craig mentioned earlier, the way it appears to work is it's reducing your eligibility under the 75%, or the amount that would be paid to you. So if you haven't applied for this previously, you're going to want to do that. This is in place. The program was rolled out pretty quickly. Generally speaking, the qualification criteria allows for nonprofits, et cetera. But from a business standpoint, if you meet the test to qualify for the small business deduction, you ought to be eligible. It's a payroll-based reduction. Many of the major payroll vendors, as we've previously noted, have developed solutions to automate or streamline this process. And what's different about this from the wage subsidy that we discussed previously is the wage subsidy is a pay your folks, apply for a reimbursement. This is a reduction in your payroll source remittance, is essentially equivalent to the 10% deduction. And this is also in place for that 12-week period. The interesting thing about this one is there's no revenue drop criteria. So a lot of businesses that may not qualify for the revenue drop, just make sure you're not overlooking this one, because 10% over 3 months is 10% over 3 months, and every little bit helps.
That's right. Yeah, the wage subsidy is applicable to large corporations. Well, any corporation or any entity that's paying wages. This one wasn't available to large corporations, but anybody could get it. So good point, Jeff. Yeah.
Now let's talk about a new announcement that has recently been rolled out, and this takes us back into territory that may have felt more familiar about a month ago, where there was lots of announcements without a great deal of clarity on how things were going to be rolled out and how the application process or implementation rules were going to look. So this is one that's been rolled out, I suppose you could say, in principle. And I think what's important to note here is that there's some interesting legislative issues when it comes to rent, where those are handled at a provincial level, whereas a lot of the other stuff that has been rolled out so far, the legislative authority to manage those things exists at the federal level. So it's been easier, I think, for the federal government to figure out how to roll things out, because they can act somewhat unilaterally. In this case, they've had to work to reach an agreement, and they have reached an agreement in principle with all of the provinces and territories to implement a 75% rent reduction for qualifying small businesses. Now, the interesting thing about this rent reduction is that I think a lot of people were worried about their fixed costs and were hoping for some degree of relief. This relief requires that your landlord chooses to play ball in the first place. And secondly, to qualify for this, you're going to have to be one of those businesses that was unfortunately hit in a fairly devastating way by the pandemic. The qualifying criteria is quite a bit more aggressive than we saw previously for the emergency wage subsidy. So the sort of short strokes of how this program is going to work, or I suppose the long strokes of how the program is going to work, is that commercial property owners that agree to certain provisions or certain relief for their tenants, and we'll talk about that in a moment, can receive a forgivable loan equal to 50% of 3 months rent from those businesses. And the period here is a little bit different. It shifts. It's not March through May. It's April, May, and June. But to qualify, the business that is seeking that relief needs to be able to demonstrate a 75% reduction in their revenues during the qualifying period, and they still must pay the 25% of their rent obligation that's not being covered by the landholder. So basically what happens here is the landlord offers you, or is required to offer you, a 75% reduction in your rent if you can demonstrate that your revenues have dropped 75%. It's unclear who you have to demonstrate that to or how. They then get a 50% forgivable loan. So they're on the hook for 25%. They're eating 25% of it, and you're still paying the other 25%. So it's kind of a shared risk deleveraging model. There's more details expected to come by mid-May. This one's going to be a little bit odd as it rolls out because it's going to be different in some measure from province to province, and it's not clear who's going to administer it, how records are going to be kept, how applications are going to be managed. It's not even clear who's going to be responsible for negotiating with the landlord. Craig, what do you guys know?
We know as much as you know. I was going to jump in earlier when you said that they're slowing down the program announcements with vague details that come out, and we don't know if it's final yet, because Friday they announced this, and of course a bunch of stuff about university students that is also not finalized by any stretch. This one is interesting because a lot of landlords that are I would say sensible, like obviously they want to keep their tenants in the long run and they don't want to lose them. And so they were already in general having to work without a sort of framework or safety net from the government to negotiate that. And so I know that a lot of folks are just paying op costs right now, or having a deferral of rent that maybe in theory extended across the rest of the rent term, or extending the terms. So this one took a lot longer to roll out because of the provincial jurisdiction requiring so much additional negotiation, as you said, Jeff. I think this is going to be one where you're going to enter into the agreement later on related to the 3 month period, and we don't know enough to really give good advice yet, but because like, for example, we don't know if this 75% rent reduction necessarily qualifies. Does it cover op costs and base rent? Is it just base rent? There's little questions like that will have to be ironed out as we move forward. But I think the CMHC will be administering this, from what I understood from the different stuff coming out from the announcements. But it's a positive thing because we need something here. But most landlords that have been working with their tenants have already sort of been arranging something. So this will at least get them to where if they're going to defer that rent for another, say, 2 years or 3 years, accepting 75% of it now is probably a good option for them and for the tenants as well. So it's positive.
From a tax standpoint, Craig, would we expect that there's tax consequences associated with it?
I would have to assume that. So everything single government grant that comes out is generally going to be included in your taxable income. Most of the time, it's an offset of your expenses. So you have the expense and the revenue, so it's really somewhat neutral to you, and it's not really a net tax impact. For landlords, this would be a taxable impact because this grant, in theory, is going to go to the landlord, and a forgivable loan is generally going to be taxable income. But I mean, it's similar to. They're getting the cash, so I think it's just a reasonable position to expect.
Absolutely, just something to keep in mind when working through the numbers.
Yeah, they'll get you later eventually. Yeah,
we're creeping up on the end of our recap of the relief program. So if there are questions out there from the audience around details of these programs, or questions from Craig, who obviously has a lot of expertise on these things, this would be a good opportunity to get those in, and we'll address them really quickly before we move on to our panel discussion. Just a couple last items to talk about. One that came out not long ago is the Saskatchewan Small Business Emergency Payment Program. It was just introduced when we last met on our last webinar. Essentially, this is a fixed cost or an operating cost relief. It's sort of unrestricted money. You can do whatever you choose to do with it if you qualify. It's a grant for businesses that have been directly impacted by compliance with a public health order. So it's not as broad brush as some of these other programs that have been announced. It's provincial, so it's Saskatchewan only. The applications are open and have been for a while. The grant is equal to 15% of your business's monthly sales revenue in either April of 2019 or February of 2020. So they kind of learned from the qualifying criteria that caused some difficulty initially for folks on the wage subsidy. The maximum payment is $5,000 per business. So again, in terms of sort of absolute reduction, your business's revenues for that particular period would have had to have been at least $32,333 to be able to qualify for that $5,000 total grant. And the payment can be used for any purpose. So again, provincial program, the application is available at saskatchewan.ca. If you've been told to close down because of COVID-19, if you're a medical office offering some kind of service that's been asked to close down, ophthalmology or optometry or something like that, this would be valid for you. If you're a restaurant or a bar, obviously this is going to be of great interest to you. But again, a fairly small amount, but help nonetheless. Sorry guys, I have too many windows open here. Getting hard to navigate. All right, and just a couple last notes here. Now we're not going to get into any of these in detail because frankly no details appear to exist. But what's happened is I think the federal government in particular has realized that as they've rolled out these programs, it has exposed some gaps in the initial thinking that underpinned them. And some of those gaps would be startup organizations or companies that were in a growth phase. And Kirk, I'm sure, will share some of his thoughts on how that's played out from a startup company perspective in a minute. Or businesses that are suffering as a result of COVID-19, but haven't specifically been able to access any of the additional programs. And so these are things where if you are in dire straits or you think you might qualify for some of these relief measures based on how your business is structured or where you're situated, just want to encourage you to go try to educate yourself and learn more about these programs, because there may be money out there that's not getting talked about in the Prime Minister's speeches every morning, or not being posted specifically on the Canada's Economic Response website that you could chase down through some of these other agencies. So the first is, there's been new funding announced for rural businesses and communities via Community Futures, and there's $287 million there. It's not specifically clear how that's going to be offered or administered, but if you are in a rural area or rural business, it's something you might want to look into. There's been new funding announced for innovative and early stage businesses via IRAP through the NRC. And there's $250 million that's been available there. So those are some businesses that often can't qualify for funding under traditional models because they're in their early startup phase or growth phase. There's also a number of financing initiatives that have been offered, or programs that have been rolled up for companies that are trying to do something innovative to actually support the pandemic response. So, innovative technologies or tools that can help the government do a better job of steering us through this thing, and new technologies, that sort of thing. There's some funding available for those ideas. There's also been new funding for young entrepreneurs announced via Futurepreneur. Only $20 million, but these are young folks that are starting businesses may qualify for additional relief or support that wouldn't ordinarily be available to other entrepreneurs. So something interesting to look at there. And then there's been this larger bucket of funding, $675 million, announced for small and medium-sized businesses through the regional development agencies, and ours here is Western Economic Diversification. That money is presumably accessible through various programs that are being developed or being announced to help businesses that are stuck but can't get standard support. So it's unclear how that's going to take shape, in terms of what the specific details might be, but there has been new commitments of money. And as you see here, we're totaling over $1 billion here in additional funding that is not specifically attached to the programs we've been talking about, but may be relevant to your business. So something to take a look at. Merv Armstrong. Merv, you have a question and we'd love to hear it. Could you just use the Q&A function and type it in for us, and we will address that for you, sir. And then just very quickly, some quick considerations before we answer some questions from the audience here around some considerations for folks to remember when they're applying for these programs. And we've touched on a few of them as we've gone through the discussion so far. First is make sure you're planning for the tax consequences of some of these things. Not so much that they're going to be enormously burdensome, as Craig pointed out earlier, but just in some of the folks we've been talking to, when they're working on their projections, they've been omitting or forgetting about the tax implication in their cash flow projections. So something to be mindful of. Make sure you don't lose track of the impact of deferral agreements and negotiating payment plans with folks that are extending those deferrals to you and being really clear about how things look. One thing that we've heard more recently from some folks who have had some success renegotiating with their landlords is they're really trying to map out exactly how their rent agreement and rent situation looks like under a variety of scenarios for how this could play out, and trying to de-risk both parties as much as possible. So something to keep in mind. Something we've been saying for quite some time, make sure you can demonstrate to your creditors and landlords that you have a plan. If you're approaching someone seeking rent relief, and I think Mitch Molnar, one of our earlier panelists, had indicated the same, it's quite useful to be able to go with them if you're looking for any kind of relief or help, and share with them that you have a plan for how you're going to get through this thing and how you're going to eventually be able to start to repay and sort of get back to square. And being able to demonstrate that's quite key, obviously, with your creditors, very important. Keep accurate records. As Craig mentioned, a lot of the funding that's being offered has strings attached to it in terms of how it can be spent, but it goes right into the general coffer. So a great example is those CEDA Canada Business Emergency Loans. If you applied for that, the $40,000 just showed up in your checking account. It's not a reserve fund, but there are restrictions on how that money can be spent. It could be as simple as keeping a really clear spreadsheet and tracking what you have declared that you've used that money for. But certainly if the funding agencies ever come knocking, that's going to be something that's going to be useful to have. And before I open it up for Craig's thoughts on other things you might want to consider, just a reminder to really understand your numbers and the impacts of the choices that you're going to be faced with. So right now, we know a lot of folks are starting to think about the reopening, and whether you're a restaurant that's going to have some big restrictions or a retail shop that's only going to be allowed to let so many people in the door, it's really going to be important to make sure that you understand the impact or the likely impact of your choices. And we want to make sure that folks don't reopen aggressively because they're excited to get back to work and realize that they're now actually incurring greater operating loss than they might have been when they were in a shutdown state. So certainly not discouraging people from getting excited about the recovery, but just to be really pragmatic and really understand how that's going to play out in your finances so that you don't end up in a worse off position than you might have been by staying closed for another month, let's say. And I think that's going to be a good segue into our panel discussion. But before we do that, Craig, any parting thoughts from you?
No, I just would say I think that you covered it really well, Jeff. When we're doing projections moving forward, I think it's always useful to have like a worst case, moderate case, best case scenario in terms of framing your decisions for things that you're going to do. Restaurants are a great example. If they open up again, there's only some of them are not doing takeout right now, and if everyone starts doing takeout, and then there's just we used the pie example earlier, at least I did. So there's only so much pie to go around in terms of dollars that people are spending on getting food. So if everyone's in there trying to get it, then it might just be a lot different than what people are thinking it can be. And those that are existing doing takeout are maybe going to have a bit of a hit there too. So it's I think it is just to say, like you say, Jeff, a plan is the most important part of it.
So two questions, or one question and one comment that rolled in here that we'll just address before we move on to the panel discussion. And the first is that the constant question that this individual is getting from their business owner clients is, what programs financially exist that might support sole proprietors or partners that were using a personal bank account for their business? And there's a question around what specific programs might be able to be accessed for those folks to help them out. And certainly, Craig, this has come up in some way in almost every presentation we've done so far. And the answer to date has been, it's a gap. It's a difficult spot to be in if you're a sole proprietor. Is any specific advice you could share with this person?
There's really, it is a huge gap. Yeah, because if you're not paying wages or you're not paying enough wages, you can't get the wage subsidy doesn't help you. The CEDA account, you can't get that loan. So it is just a gap. There's nothing currently on offer aside from that access to credit stuff that would be applicable. Even the CERB benefit, which in theory would apply to you if you're working 2 hours a day or 1 day a week, because that's all you can really do as a sole proprietor or a small partner, like a partnership that's relatively lean in terms of staffing, or into just you and another partner, then you can't get the CERB because you have not met the test of not working for 14 consecutive days in some ways. So I think for something like that, they try to hit a really big swath of the population with the programming, and hopefully they come back around and try to address that, but they have not yet done anything in that regard. It's quite frustrating.
It is, I agree. And one other question that came up that would probably be equally frustrating for folks is one of our friends in the mortgage broker industry indicated that they've had clients' mortgage financing actually put in jeopardy because they had received a benefit under the COVID-19 relief program. So interested if there's other detail there from the individual that submitted that comment, but certainly something to be aware of if you're presently in the process of buying a property or looking to secure mortgage financing.
I would assume maybe it has to do with if you're on the CERB benefit, then you're not working. And so maybe, because obviously when you're financing for a personal mortgage, the bank wants to know that you'll have an ability to repay. And if you're on the CERB, you're not working. So maybe that puts your future ability to work in jeopardy. And that could be the thing. I don't know. Sometimes you're disqualified from accessing programming by the other stuff that you've received. If you've got any other subsidies, like for example, that provincial grant, it wasn't available to you if you had other sources of funding coming in. But I'm interested to understand why that would be the case.
I'll keep an eye on there and see if anything, any additional detail roll in, and we'll move back to that. All right, well, now the part that everybody gets most excited for. Sadly, Craig, it's not you and I talking about accounting and financial programs.
Well, at least you and I got the most excited for that part. You know?
We were excited. That was the highlight of my morning. And so we've set the bar extremely high for our assembled panel to entertain and regale the internets with their expertise and perspective. I'll just quickly reintroduce everyone. So we have Sean Stephan again from the Rusty Shovel Landscape Shop. We have Kirk Morrison from Krugo. Craig's going to stay with us from Virtus Group, obviously. Dave Sullivan from Global Ag Risk Solutions, and Kevin Stricker from Fleece Tallman Lumber. And basically today there's sort of three areas that I was interested in exploring. We'll start it off with some questions that I have for our panel. And again, the best way this works is folks have questions from the audience and submit them, but it's not exactly blowing up right now. So certainly encourage the audience to help us out. But there's sort of three topics that I think are on a lot of people's minds right now with respect to the recovery. The first are, what are people's experiences so far navigating the pandemic, and any lessons or insights that they've learned that they might want to share with other folks out there in small and medium-sized business land that they'll benefit from. The second is their perspectives on Reopen Saskatchewan and how they're planning for a progressive return to normal or some sense of a new normal. And we'll, before we shift into that conversation, we'll quickly remind folks of the five-phase Reopen Saskatchewan plan. And then finally, something I'm really interested in learning from our panel today, and something we haven't yet on this web series had an opportunity to discuss, is insights from these folks around what gaps still exist in terms of challenges that businesses are facing, or perhaps additional relief or programming could help out or address these problems, and also where additional support or programming might be necessary to support Saskatchewan's economic recovery in the long term. So one thing that I know has been on a lot of business owners' minds lately is that the bulk of the measures that have been revealed to date are generally focused on a quarter, about 3 months worth of time. Obviously, a lot of people are going to be impacted well beyond Q2 of this year. And there's not a lot of clarity out there right now on whether these programs will be continued or whether the government will continue to be interested in incurring increased deficits to fund these programs, or whether they're a good idea from an economic lens. And so I'm really curious for folks' thought on that. So as we begin the panel discussion, I might open it up to anyone who's interested in sharing with us what their experience so far navigating the pandemic has looked like, and any insights that they've stumbled upon that they may have been surprised by, or that have led them to find a better way to handle a particular challenge that they feel other people out there are going to be experiencing. So this is the part of the panel where everybody should unmute themselves as well.
Jeff, I've got, with regards to your question one, the experience of navigating the pandemic, it's fair to say that anything we've ever learned has changed drastically. And I think the challenge we have is everybody's got such unique situations with regards to their staff. We've got some staff that we're starting to call back. We're very fortunate, but a lot of our staff are kind of reluctant to come back because they're concerned about safety and different things like that. And it's really interesting to see how people react to the change, the good, bad, or the ugly, or the difficult. I think that moving forward, employers are going to have to be extremely flexible with their key people, because there's just so much unknown there and so much anxiety that you know, we have to be very cautious, I think, with our staff, not to push them too far, because there's a lot of fragile people out there right now.
And Kevin, what sort of measures or accommodations are you expecting that you're going to have to make make that work?
Well, you know, for our younger staff with kids, you know, given the situation of daycare, flexible work times, you know, depending what their spouse or their partner does for a living, and what that need is, we have to be somewhat flexible. You know, who's kidding who? Working from home, say what you want, but it's safe to say that they're probably not working a full 8-hour day because of things in life and things, and it's tough to negotiate with them a wage reduction or some flexibility, but very, very difficult times, that's for sure.
Other folks' experiences on the employee side, particularly as it relates to maybe bringing folks back or exploring how that looks with some of these wage subsidies or these accommodations that Kevin's mentioned?
Jeff, I can jump in. With our group, you know, I think two big things, as Kevin mentioned. One is the kids and the kid side, causing with the schools closed and the daycares closed, there's going to be a lot of accommodations because of, you know, two working parents, and we're going to have to accommodate that in our return to work at least until the summer months, when we would be, you know, kids at home anyways, and then making a plan going forward, assuming that we might be in the same situation in the fall or some sort of who knows what, whether we open up and then end up closing back down in November or something. But having our plans in place so that we can do that is, I think, going to be important for us to make sure that we can operate seamlessly, or as seamlessly as possible, you know, accommodating those families. And then, as Kevin mentioned too, it's been surprising the individuals that are nervous or apprehensive about coming back to the office, and us having to be sensitive to their apprehension and trying to figure out ways to accommodate. You know, we need to get the work done. We don't want to lay them off, but they need to feel safe. And how do we achieve that?
Just on that point, and you know, curious for your thoughts, Dave or Kevin or others on the panel. At what point, as the recovery starts to unfold and it becomes sort of, I suppose, legally possible to return to some form of business as usual for various industries, and we know that's going to be a 5-phase approach over a period of months. At what point, you know, does your business, or how do you start to navigate starting to become, I think, more prescriptive about how people are going to work, or what the expectation is around coming back to work? Because it's obviously, as you said, going to be a lot different for everyone. Circumstances are going to change, and some folks' comfort level is going to be quite different. Sean, I know from speaking with you that, you know, it's not just about what you do internally as a business as well. It's about how you police up your clientele that's coming into your workplace, and whether or not they have the same care or caution around these COVID-19 precautions that you or your team might have. How are we navigating that?
Yeah, I think there's traffic control for sure in a retail setting has been interesting, and so we've been operating under the greenhouse and landscape retailers have a specific set of guidelines that they were able to open up with in April here. And so that's like per building, you're allowed to have one customer per 1,000 square feet. And so we've been operating under that and using our yard space, you know, thankfully where most of our stuff is outdoors. So we're able to spread out and accommodate that social distancing. But like our shop is only 1,600 square feet. So, I mean, we can have 1.6 customers inside the shop. I guess if you and your wife were to come visit, you could poke your head in and she could come inside or something like that. But that's, yeah, I think it's not a natural thing for people to be physically distant from each other, right? So just having those client interactions, it feels very standoffish to stand 6 feet apart from people. But you have to get creative with signage and just reinforcing that to you know, to really keep those procedures in place. And I think for us too, we have, we have contractors that buy from us that are, they feel like family, right? Like it's like Cheers, where we've been working together for 10 years, and they come in and you want to greet them, and they feel comfortable just walking right in. But if we already have a customer in there, it's very awkward to have to kick a very large customer out of the store and say, hey, let's go outside and have a conversation instead, right? So
I can indicate from experience that Sean has never had any trouble kicking me out of his store. So it must be for good customers only. A comment just came in from our audience here too, just highlighting the difficulty for parents in dual parent situations, and perhaps more so for those in single parent situations, with all the summer camps closed and these things that I think are great for kids, and they're going to be missing out on those experiences, but also play a pretty important role in facilitating the day-to-day work obligations of parents throughout the summer. So echoing a lot of the comments from the group. There's another one too that just I think is a bit of a play on the theme, and that's this idea of, as folks are perhaps reluctant to come back to work, even those that perhaps don't have children and don't have obligations that would make it difficult to come back, and don't maybe have those same public exposures that you might see in retail or some of the more face-to-face businesses. How are folks going to address the fact that some folks are going to want to delay returning longer than others, and are you guys going to keep making those accommodations available to them? And I guess this person's sort of asking, how do you handle it in the meantime, and where do you sort of draw the line, and how do you navigate sort of becoming a bit more authoritative about, hey, we're back to normal and there's some expectations around here? How are you guys working through that?
We're looking at it basically on a case-by-case basis of what the skill set of the employee is and what the need is. We've got some staff members that we need them on a daily basis right now, so we're trying to accommodate them, but it's extremely challenging to make sure they're comfortable and safe, and the work gets done. So sooner or later you're just gonna have to draw a line in the sand and say it's back to work as usual if you want to come back, and if not, well, sorry, but the show has to go on somehow, some way, and that's going to be the real challenge of being an employer. When do you push that envelope and make that call? But there will come a time where they'll have to be almost mandated back to their work, because we need them, and we've got an investment in them, and we've got a business to run. And I don't want to make that sound cruel or harsh, but that's just the reality of being an owner operator.
Absolutely. I'm curious for the panelists here that operate a business. I think, unless I'm mistaken, that everyone on the call has been able to maintain some form of operations during the pandemic. Is that accurate?
Yeah.
Yeah.
And I'm just curious, as you've learned, we have an interesting representation here of some service-based businesses as well as some bricks and mortar product type businesses. What have folks learned about how to continue to offer your service and help customers during the pandemic that might be interesting or beneficial to other businesses out there that are struggling with how to adapt to this new way of doing business, where a lot of the things, Sean, you mentioned the face-to-face, the high fives, the handshakes, the relationship building is maybe not possible the way it used to be. What have folks done that has worked well for them that others might find a positive story in? Not everyone at once. It's hard when you all talk at the same time.
I could jump in. Our business is Global Ag. We've historically, our workflow has been manual. Was a lot of paper, a lot of spreadsheets, and luckily we invested a lot of money with Jeff and the team at Ascent, and we upgraded all of our systems to make ourselves web-based. And that lucky that we did that when we did it. It allowed us to put our team into a remote environment from a workflow standpoint, and we really didn't miss a beat between the work that we did with Ascent and then Powerland. Shout out to them; they kept us up and running when everybody was scrambling, trying to make sure we had remote access for people that hadn't had it before, using SharePoint and Office 365, and then. Our sales force has been, in a rural setting, is traditionally a face-to-face, sit down at the kitchen table sort of business. We're dealing in large premiums for the insurance in the 6 digits, sometimes 7-digit insurance premiums. So it's not something you generally do over the phone or over the internet. But we had to adapt, because the farmers that we deal with didn't want people on their farms leading up to seeding, because they didn't want to get sick right before seeding. And then the industry was actually fairly accommodating to it, allowing us to work using Zoom. So we bought a subscription for Zoom for all of our salespeople, created a quick guide for our farmers on how to use it. And then for the most part, we've been able to close our business or do our business using Zoom with our sales force. And we had to professionalize some of our presentation materials and things to make it a little more friendly for a Zoom presentation rather than a face-to-face, where you could, draw on a piece of paper. But the technology worked pretty well, except in the cases where the rural internet was so bad that you can't connect. So not having a voice, you can do a voice call, but not being able to present your information to the farmer when the internet service was bad was certainly something that's cost us some business, because we can't get our message across and close that deal, because it just the struggles with the internet connection make the meeting so poor that your chances of closing that deal become very slim. And that's been probably one of the biggest holdups, has been working with people outside of the major centers, has been their internet speed. And so their ability to get the deal done has been slowed down. But we found cell phone connections are actually better than the internet connections. So we can run a Zoom call over a cell phone, or hotspot it to an iPad and get at least some connection to that farm in that rural area, better than their paid internet that they have in their house.
It's definitely, and I appreciate your kind comments, but it's definitely shown that folks that have maybe embraced some of these cloud technologies or remote working technologies as part of their normal business were obviously better positioned to confront this thing. And I think some folks are playing a little bit of catch up. I'm curious though, beyond the infrastructure to operate, and maybe this is a Sean or Kevin question, for businesses that have a customer facing or retail component where, Kevin, I assume this is true of you, but I know for Sean, like if I'm going into the shop and I want to see, I'm picking a stone for my patio, a big part of that process traditionally is going to take a look at it or seeing it at the home show. And, a picture looks great, but every picture on the internet looks great. And sometimes you see it in person and you can tell what you want or what you don't want. Kevin, I'm assuming that's true of your business. So for folks that traditionally have liked to come around and tour around the lot or look at what you have in the yard, how are you guys handling that now that people really aren't allowed to do it in the traditional way? And have you had success with the online tools that you both have?
Well, I think the first thing, sorry, Kevin.
No, go ahead.
The first thing that we did was really took a hard look at what our website was communicating, because when you have a physical storefront, and a sales force, it's really easy to rely on those people that are just coming in, and then you can tell your story. But on the web, if you don't have that ability for them to come in and see all this stuff, you have to make it very clear as to what you offer and how you want people to do business with you. So we did a little bit of an overhaul on that. And again, just like Dave said, we were already working on some of this stuff to make it easier for people to submit project ideas and be able to qualify a lead a little bit easier and give a ballpark quote before we go down the takeoff type of route there with our quoting process. So it helped that we had some of those systems in place already, that we were working on them, but that kind of jumped up the priority list as far as how we set up our infrastructure there. So so we're doing as much as we can beforehand as far as communicating on a call or by email or making things available by phone and on the web. But then we can also, if people need samples, they can come in that one at a time, and we can give them those samples to be able to look at, make a quick decision, and then go back and decide what they're going to do.
How about for you, Kevin? Similar experience?
Yeah, very similar. I think that the challenge we have here is, although we have a website, it's maybe not quite as user-friendly as it should be. So now we're playing a little bit of catch up there, but making good progress. You know, we're a little fortunate that a lot of our products are out in a fairly large yard or compound, so people can still look and touch and feel the product. You know, our info at freeztallman.com is very busy with quotes and things, which is great, but it's difficult to sell the Freeze Tallman story in an email without a face-to-face or having my staff really make the customer feel important and valued. It's very difficult in an email or even on the phone. So, you know, and we've always prided ourselves on doing business in a term I call belly to belly or face to face. So it is a challenge, but we're making do. And I think the fact of the matter is, I mean, the public are very aware about the times we're in and the struggles and challenges we're having in this. And I mean, it's like I said when I started talking earlier on, it's just unprecedented times, and it's got to be a lot of flexibility with the consumer, and the employer has got to be flexible as well as the staff. So it's we're doing some interesting things. You know, we've got a window that we've got our debit card that we can stick outside for people to pay and pick up their order, and it's kind of borderline comical some days. Actually, it's kind of funny. So, but we'll get through it.
I mean, there's perhaps a minor silver lining there, Kevin, if I'm any indication, then that is that between the protracted Netflix sessions and the curbside liquor store pickup, belly-to-belly business is going to be a lot easier for me once things get back to normal. So perhaps some good news there. A silver lining for the belly-to-belly crowd. I'm curious, and Craig, your business and mine are fairly similar in the sense that, you know, we're able to deal remotely perhaps a little more easily than some of our businesses that have bricks and mortar sort of storefront operations. But I'm curious on the management of people's side. So, you know, your business, my business, pretty much everyone active in the business is still working like they normally would, but they're working from home. And as managers, I've certainly found that it's been real tricky to navigate how to keep people engaged. I think, Kirk, you're probably in a very similar boat. So, you know, as guys who are used to managing a certain way and probably had some things in their management repertoire that they wanted to improve even when we were working normally, how have you guys adapted to this idea of managing your teams remotely, and what have you learned along the way? And maybe we'll start with Craig and then move to you, Kirk.
Yeah, we've of course we're in a pretty lucky position, so I feel guilty sometimes talking about how we're doing because we're not where we normally would be at this time, but because taxes still have to get filed and planning, all these programs need some clarification with our clients. So we're in a pretty lucky position that way. What we found is that our people that already know what they're doing and they're relatively trained up, they can you wind them up and you let them go, and they're in their home offices, and we've been able to work remotely really well. Our newer folks, it's really hard to train unless you're belly to belly. It's hard to train the people and impart the sort of the technical. There's a lot of technical knowledge in our field that it's really challenging. So, and then of course our people are subject to, you know, anything like they're working from home, sure, but a lot of our workforce are younger folks that aren't in a beautiful foyer like you are, Jeff, with a wonderful tree in behind. Sometimes they've got roommates. They're in a 1-bedroom apartment, and so it's really challenging for them to sort of make it a productive day. With, like, for example, we had students that were supposed to start on May 6th or 1st or whatever the heck it was out of university, and we've had to tell them that we'll defer them until September because we don't know how we could possibly train them effectively right now. So we're struggling with efficiencies right now more so than anything else, and also just some of our team are just struggling with this environment and the general uncertainty and stress that causes. And so there's some additional support we have to give to our mentors, and we've got an employee assistance program, things of that nature. But it's kind of challenging even to do like a Zoom call or we use Skype internally. It's not the same as being face to face. And so me as a guy that likes to walk around the office and glad hand a lot, it's a bit, even for me, it's a challenge right through this period. So I think our main points are a lot of touch points, a lot of sort of communication, using video chat as much as you can, as opposed to just a phone call. And then making sure people are sort of supported and they understand that we accept a little bit of inefficiency here because we understand where everyone's at. But really just that support, and we'll get through this, that sort of positivity looking forward is what I think has been most crucial for us moving through this.
Thanks, Craig, and appreciate the warm foyer remarks. My wife tells me that this is called a money tree, and I can tell you that since COVID-19, I think taking it back is defective. Kirk, how about you? What management lessons have you learned?
Yeah, I mean, we're also very fortunate. We came into this, we've been working from home for, this is our 7th week now. And obviously, like, we're in the software business, so everybody has a laptop and an internet connection. So theoretically, productivity can be at 100%. And I think it was, for the first couple of weeks, it borderline was. But we're dealing with the same type of thing in managing the stress levels of our team members. A lot of young team members who have, they're seeing a lot of their friends out of work. They're seeing a lot of this uncertainty, some uncertainty even within our own company as an early stage tech startup with not an unlimited amount of runway to kind of do what we're doing, and being very exposed in the travel sector, which is undoubtedly going to be one of the last to kind of return to normalcy. So it's been trying to manage, the mental health and kind of the stress levels of those teammates, and really, some of our more senior folks, just as much as the younger ones, really, in terms of kind of managing that. We had a couple of folks who were kind of scheduled to go out on some holidays that got canceled. And then, they just kind of kept working in this environment, and we're definitely seeing challenges where people are, they're dropping off and they're not kind of able to maintain that focus just because of kind of what's going on. So we're trying to figure out how we navigate that, and provide the necessary support. And then I think on the questions of return back to the office, I think we've got a bunch of kind of philosophically, everyone's really excited to get back to the office because we've kind of got a great culture in that way, and work out of the cultivator space with Connexus, which is a great space for us to be in. But I think there is going to be that that kind of conflicted viewpoint where it's, everyone is dying to kind of get out of their space, but at the same time, there's kind of that underlying fear. So trying to figure out how we're going to kind of manage that going forward is something that we're talking a lot about.
Thanks, Kirk. Sorry, go ahead, Craig.
We can split our team into probably thirds of people there's a third of people that will really want to stay at home for as long as they can because of either concerns, or they feel like some of our people just like being able to get up, quick shower. You don't have to drive into the office. You don't have to put on a collared shirt, and they just get to it. So they like that, and they're almost happy to be in this type of work environment. And then we've got a third of people that'll be somewhat indifferent, and a third of people that really are raring to get back in the office. And so we're going to have, just like the government has a phased plan to be back to work for normally, or back to the economy for normal, we'll have a phased in plan for certain people to come back at certain times. And we're going to do it where a section of the team comes in and they're in, and then we will bring in the next section, and then we'll bring the next section is what our general framework is going to be right now. We're not going to have a rotational thing where people come in and that would, like, for parts of the week, we'll have sort of tranches of the team that are just fixed in what their work schedule is.
And that's actually a decent segue off to our second topic. But before we get there, I just have one last question for the panel. And one thing that a lot of small business owners and medium-sized business owners have been telling us is that perhaps now more than ever, they've really learned that their cash flow management skills weren't maybe as good as they thought they were. And I know we have some folks on the line that are particularly talented when it comes to cash flow management and making sure that they match their operations to their expected cash flows. And just, I'm curious if there's any advice or insight that you can share about your own processes for how you're keeping an eye on cash flow, or things that maybe you're doing a bit differently in light of COVID-19 that would be helpful for some of these businesses that maybe haven't forecasted the bank account quite as carefully as they maybe should have been. I don't know where we want to start. Maybe Sean, I know you're pretty passionate about cash flow to the point of perhaps it being an unhealthy obsession. So maybe we'll start with you.
Well, I think with, it's the lifeblood of the business, right? Like, if you don't have cash, it doesn't matter how much profit you're making. If you can't pay anything out, it doesn't matter. So I think that was part of the emotional roller coaster for me, was that when we first got into this thing, we had already landed a bunch of our products. Like, that's how we purchased, similar to, Kevin would, you ramp up for your spring season with booking orders, and it's landed on the shelf. And then I don't even know what some of that stuff is going to cost right now, because of where a lot of it's purchased in US dollars, and that currency fluctuation has gone crazy. Our currency, the company we're using for currency hedging went into bankruptcy protection, and that was really, really difficult to try and manage too. And so all of these uncertainties when it comes to cash. And so, you know, having those really honest conversations with our staff and with our customers. So, you know, being honest with the staff as far as the cash situation goes, like, you know, hey, we've got money for April, we're good, but we're going to be, you know, we still need to generate some revenue and start bringing in cash. And I don't know what that market looks like. And fortunately, it's played out that the government, some of the, you know, the emergency bank account money has flowed very well. That infused some cash. We've got some, we have actually had some in the last couple of weeks, some really good sales activity. So that's promising to see in the market. But just, you know, when you're managing that cash, getting it in, making sure that you're communicating with your vendors on what you can do for payments, and if there's anything you can negotiate, deferring any payments that can be deferred, and then getting back on track when you're able to start making those payments. But also on the staffing front, like, it's really hard to dictate based on demand. We know what our typical season would look like, but we don't know what this season is going to look like. So, you know, when Craig's talking and Dave and Kevin are talking about phased, you know, return to work, that's how we've kind of been treating it. Is, you know, in March and April, it wasn't critical for our people to be in the shop, so we had a skeleton crew kind of answering questions there. But then once we started getting more demand, we needed to move people back in, to the point where I've only got, you know, one person that from our team that isn't on, and we're just kind of playing wait and see on how the demand plays out.
Thanks, Sean. Other perspectives on cash flow and maybe forecasting demand and what you expect things to look like as the recovery happens? Kevin?
Well, you know, for us, a lot of our commitments for our spring bookings are made basically by about the middle of January. So in the middle of January, I was fairly optimistic about 2020. I felt that, you know, our construction industry has really had a tough go the last few years. So I was fairly optimistic that 2020 would be a year of recovery, and it started out with the fundamentals of it being a year of recovery, and then this COVID hit. I don't think there's a lot of building supply houses in Western Canada right now that have got way too much inventory for what's going on. There's just no doubt about it. There's just way too much inventory. So it's going to be a process to work through it. You know, I'm sure thankful that we've got the balance sheet we do. But sooner or later, I mean, there's going to be some very difficult questions asked. I'm more so worried about my customers than myself, because you know, if they're overextended at all, I don't know what's going to transpire in the next couple of months here, because you know, we can say what we want about people wanting to do the projects at home and things, but sooner or later, if people aren't working, they're just not going to have the ability to pay for those projects. So I think we're in for a couple of really difficult months here.
Yeah, it's certainly been our experience as well. That, I mean, you start to worry about the impact of your customers, and you start to sort of follow the bouncing ball maybe a little bit more closely than a business owner normally does, to where their customers come from and how those folks are being affected. And it all really seems to end at this consumer level. It's interesting. We've been chatting at our office a lot about how this is one of those first economic crises, at least certainly in my experience, and perhaps in the experience of others, where it's not simply about these large major institutions that might collapse under the weight of an economic crisis. It's this notion of too small to fail. It's all these mom and pops and these sort of segments of the economy that typically don't get a lot of media coverage and aren't particularly glamorous, that seem to be the thing that's really going to turn whether or not the recovery plays out the way people are perhaps hoping. I just want to share, there was one comment from the audience that I thought was kind of interesting around the real estate industry, and just chatting about how that industry has adjusted itself to make successful business transactions during this time of COVID-19. And they've indicated that they're doing a lot more pre-qualification than they might normally have done, to try to get folks much closer to sort of perhaps a ready-to-buy state than previously, and using a lot of the virtual tools to make sure that when people actually do get to a showing, that it's perhaps a little bit further along in the process, a little bit more serious than previously. And that they've adopted some interesting protocols to try to make sure everybody involved is protected, which is kind of interesting. And certainly I've actually heard that firsthand. My brother's in the process of selling his property, and he says it's actually been quite interesting how effective it's been. So lots of industries doing interesting things. I guess one question that I have, and we'll use it to leap into our discussion of the Reopen Saskatchewan plan, which I'll provide a quick recap of in a moment, is how much do we expect that some of these new realities might persist well into the future? So for us, our team's working remotely and they're pretty comfortable with that. Maybe in the summertime, people want to spend a little bit more time at the lake and still be working normal hours, or maybe our customers' businesses are forever changed and the places our demand comes from is going to be different or look different. Or maybe if I'm a realtor, maybe someone buying a house is much more comfortable than they might have been previously using virtual tours and that sort of technology. What do you folks feel is going to be the lasting impact of this? And do you see business getting back to normal in a year or 2 years' time, or do you think it'll forever change some of how we operate?
I think
Kirk,
there's,
go ahead.
yeah, maybe I can talk to that. We've been having, not with Krugo, with our other software development company, tons of conversations with folks lately around what that kind of new normal looks like. And I think the reality is that it's probably a hybrid of what we were used to before. There's aspects of, that kind of socialization and, the belly to belly, all that type of stuff that I think people are definitely going to be craving getting back to that. But I think there is new consumer behaviors that are emerging that will have some stickiness. So we've been having a lot of interesting conversations with different companies, large and small, about thoughts that they're having on how they kind of use this time to adapt their business to try to meet that opportunity on the other side of this thing. And I think it's just really, really interesting to think that this situation is really accelerating digital strategy for a lot of different firms. And I think the ones that are able to kind of think about that, amidst all the other things that are going on right now, might have an opportunity on the other side.
Thanks, Kirk. Other perspectives on how things might change forever? I mean, Sean or Kevin, do you expect that some of your business and the way you transact will stay different and people will become more comfortable maybe not doing that belly-to-belly business?
I fully expect that it will be a different landscape, that's for sure. Yeah, I think, and I think it's up to sort of independent businesses to get up to speed quicker than later to do more electronic transactions, because I think that's just going to be the way of the future.
Yeah,
and
sorry, go ahead, Kevin.
And I also think there's going to be a fair amount of commercial real estate vacant when this is all said and done.
Yeah, that's certainly a perspective we've heard as well, that some of these businesses that don't make it, the demand for commercial space might see a drop. Be interesting to watch that play out. Sean, I know you're going to add something.
I'm kind of on the same page as Kirk as far as like the digital strategy, but also just general business strategy. It's really forcing the hands of operators to hone their skills on becoming a better operator, because there's certain things that when we're starting to go through and look at, okay, so how do we process orders? Okay, for our contractors, you got to make sure that instead of just coming to the shop and trying to figure out what you need, like you got to do some advanced planning and do a material takeoff and get a list and order it, and we can deliver it to the job site. And those are things that should be done in an efficient business anyways. So it's a good opportunity to form some new habits and get more efficient on how you operate, for sure.
An interesting comment in from the crowd that just this individual feels it's going to fundamentally change the way of doing things, and that some businesses out there are probably realizing right now that they can get by with lower overhead costs. And Kevin, to your point, perhaps they are realizing they maybe don't need a bricks and mortar office as much as they once did. Our business is actually interesting because it would fit into that paradigm pretty well. I mean, we really probably could be a virtual office if we chose to. Craig, on some level, you're probably in the same boat. I think what we're finding, though, is that the collaboration, and particularly the creativity that comes from collaboration, has probably been the trickiest thing for us to recapture via Zoom. Like, there's a certain element of our business that is sort of that lightning in a bottle element, where all these people together, colliding in these interesting and unexpected ways is where a lot of our best ideas come from, and a lot of the best advice we give to our clients emerges from that. And it's hard to do that in scheduled face-to-face Zoom sessions. So I appreciate that comment. I mean, certainly we're eager to get back to our bricks and mortar office, but I do expect that there's probably some folks out there that might be looking at operating a little bit differently. I want to shift us into our second major topic here today, if I can. I'm just going to reshare my screen so that everybody can be reminded of what we're talking about. And our second topic is your perspectives on reopening Saskatchewan. And we had a question that we'll use as a bit of a jumping off point in a moment around PPE and workplace protections and some of the things that you as operators are likely going to be having to develop some expertise and capability in that you probably never in your wildest dreams imagined would be part of, you know, running a lumber supply company or running an agricultural insurer, but that's our new reality. The Reopen Saskatchewan plan itself was announced last week by the Premier. Certainly, there's some cause for optimism in Saskatchewan. We've seen that our curve has been quite flat by comparison to some of our neighbors, and Canada has certainly done a good job as a nation, particularly relative to the experience we've seen in the United States. That said, I think there's still lots of reason to be really cautious about how things might play out over the next period of time. And the plan that was announced really does reflect, I think, that level of caution. So there's some opening up that's going to begin here right away in early May. And just to recap for our listeners, in case they're not familiar with the plan, I'm just going to quickly run through the 5 phases that are contemplated really, really quickly. So phase 1, which is planned to start up here in early May, is the reopening of previously restricted medical services. I think the logic there is that some of those folks are probably even better positioned than others to protect themselves and protect their clients from transmission of the virus, PPE and that sort of thing. And then also some opening of, I suppose, what's considered lower risk recreational activities. So opening of golf courses, parks, and campgrounds, albeit with a huge number of restrictions and closures that would prevent sort of social distancing from being violated and that sort of thing. Phase 2 would see a reopening of some of the retail shops on a more limited or controlled basis, those that haven't been able to maintain some of their operations, as well as select personal care services, so barber shops and that sort of thing, which those watching will see I'm in desperate need of. Phase 3, which has no date attached to it right now. We'll talk about the dates for phase 1 and 2 in just a moment. Phase 3 would see a reopening of restaurants, food services, gyms, and that sort of thing, certainly with very aggressive restrictions. So the restaurant restrictions right now are contemplating a 50% cap on their typical capacity and that sort of thing. Getting childcare and licensed childcare facilities back online, getting the remaining personal services businesses back online, and progressively upgrading the size of public and private gatherings from the current 10 to 15 guidance. And then phase 4 would see indoor and outdoor recreation facilities open, the size of gatherings grow to 30 people. And phase 5, I suppose, is sort of that ultimate phase of considering some lifting of the overall restrictions. So I think it's important to know that even though 3, 4, and 5 sound really good and are really encouraging and hopeful, there's no timeline associated with any of them. And I think the government has wisely been very clear that they're going to be watching how well we as citizens, I suppose, follow the rules and behave, and how that translates into additional cases and additional statistics that would be troubling. And that's going to govern how aggressively they reopen the rest of the economy. As I mentioned in my earlier comments, there's been some early evidence that people were, you know, between the good weather on the weekend and some excitement around the relaxation and the things that Premier Moe said the other day, were maybe a little bit excited about getting back and maybe let their hair down a little bit when it came to social distancing, and that could obviously be problematic. But in terms of phase 1 and phase 2, just to give some clarity, so the medical services that I mentioned would be reopening on May 4th, and again, some very stringent requirements around them. Parks and campgrounds on June 1st, golf courses on a limited basis on the 15th, and that sort of thing. And then phase 2 is the other section that we have a date for right now, which is, again, retail and select personal services, and those are looking at May 19th. So when this was announced, that gave about 3.5 weeks between the date and the announcement and when this phase 2 would be opening up, which has been consistent with a lot of the projections that have been coming out of the various epidemiologists, et cetera, that you hear in the news all the time. And I'm curious for the perspective of our panel. How do we feel as business owners about the plan as it's currently understood? Are we getting excited to start to reopen? Are we concerned at all? And how are you folks in your own businesses going to decide when it's appropriate for your own business and your own teams and your own customers to open up? And how might that differ or look very similar to what's being proposed by the government? So just curious for an initial reaction from folks. Who wants to lead us off?
I can jump in, Jeff.
Thanks, Dave.
Yeah, our business is very cyclical, so we have an annual cycle, probably not all that similar to Sean or Kevin's or even Craig's, where the bulk of our business is going to have gone by the time we get to reopen our business cycle. We make all of our sales happen in essentially February, March, April, and by the time we reopen, the year will be done, and we'll be looking into 2021. And our plan is to reopen, slowly, probably similar to what Craig mentioned in stages, taking into account people's personal situations and their personal level of comfort. Eventually trying to mandate people back. I'm not sure how that will go. With the eye on the weather, I guess, understanding that if this thing gets locked back down, that we'll be ready to do that again. But our business right now, I'd say our biggest watch out I would see is that it's really tough prospecting new customers and building our funnel for the 2021 season. That starts through May, June, July, August in our summer months, and then our trade show season in the winter months, which culminates in our sales season in the late winter, early spring. And that prospecting is going to be the hardest part about how do we manage that lack of face-to-face interaction going into 2021 if this thing stays in some level of lockdown, and trying to find the digital tools to replace some of that face-to-face interaction, some of our answer to that. But it becomes a real look at cash flow and understanding overheads and having a real tough look at every expense line to make sure that we can survive a potential downturn if that prospecting doesn't happen the way that we anticipate it usually does, and creates we can do the work, but will we have enough customers to fill the funnel is probably the biggest question we have.
Yeah,
it's certainly a question we're grappling with. Sean, I suspect the same is true for you.
Yeah, and like we're not sure because we're the same way. Like we'll do 85% of our revenue between April 15th and September 1st. So yeah, we bring in some money other amounts of time, but once that window's gone, it's gone. Like we don't get back until next year. So that was my big concern from this year, was that by missing the home show, we would typically sell about a third of our landscape design packages in that period in and around the home show. Well, we sold about this many during that time this year. So what does that pipeline look like for customers coming in? Now it's starting again. We've been doing that, but it's just pushed out later. And so how does that translate into your August sales? Like, are the sales that we're experiencing now holdovers from a poor fall last year? And what does that pipeline look like for August? So I think it's very important to go through, for all businesses, to go through a variety of different projections from a revenue standpoint and how that would affect your expenses, because with this Reopen Saskatchewan plan, you really do need to look at the fine print of all of these reopen plans, because yeah, a golf course can reopen, but they're only allowed to have 12 golfers an hour compared to 28 golfers an hour on a typical tee sheet, for example. And you're not going to be able to have league nights. So, like I play golf at Deer Valley. They have a strong men's night and ladies' night program that, everybody buys a meal afterwards and stays for drinks, and all that revenue has evaporated, right? And so even, having a conversation with a friend whose daughter owns a bridal shop. Well, she fits into the clothing store, retail sector that's allowed to reopen on whatever date it is, but nobody's going to be allowed to try things on and or touch anything. So I mean, with a bridal shop, every single thing is, and that's if people are still having weddings, right? So different sectors are going to be hit differently, but that's where some of these supports, yeah, there's a wage subsidy for March, April, May, but how does that impact people that their businesses are going to be impacted in December, when there's limited Christmas shopping or something like that. So definitely the projections and going through a variety of projections and looking at what those restrictions on your particular business are going to be very important.
You know what? I think with the plan that Premier Mo rolled out, I think it's a solid plan and I support it. The challenge society is going to have is it's going to be a very long time till there's surplus cash to have entertainment and go to events and just stability in the marketplace. So I really think, like for my retail business, it's going to be 2021 till we get back to normal. I think, you know, we'll always do some contractor business, but as far as the retail cycle goes, I think we've missed this year, and it'll be 2021. So we'll have to hunker down and watch our cash flow and our cash burn, and but we'll get through this.
Cautious optimism, I think, for sure is the order of the day.
Mm-hmm.
Kirk, Dave, Craig, anything to add?
I echo Sean's comments about these businesses that are allowed to reopen. Well, a golf course in Saskatchewan doesn't do very well normally, and so because it's such a limited season, and so if they can only have 40% of the normal tee times going, and they can't have the same people congregating for liquor and food sales, that reopening may not make sense to do the maintenance and the groundskeeping. A bridal shop, like any retail store, if people can't try on the clothes,
Yeah.
That's what's the point of reopening in some ways, right? So it's the reality to the situation. So it's not something we can avoid. We want to make sure that people are safe and taken care of. I have real doubts about how quickly this thing will get back to normal until people can work out vaccine stuff, or we're really through a combination of travel restrictions and the general flattening of the curve that it's kind of back in that normal state. So for our client base, like when we look at it, like we are lucky in that people have to get their taxes done. They have to do financial statements, return to the bank. They need some programming advice. But if 10% of the businesses in the province don't make it through this cycle, then we're going to be hitting that same way too. So I'm just hopeful that to Kevin's point about cautious optimism, and like I know we'll get through this as a province, but not everyone's going to get through it in that same way. Kirk, your point about getting leaner and meaner, really, really valid, because that's going to be necessary here. So I don't think it'll be only the strong survive moving through this, but it'll be something where people that have a good balance sheet, like Kevin said, that have that resources and that sort of vision to what the future looks like, how they can pivot through this, that'll be the key to success moving forward. But I just can't see it being a normal sort of 2020 by any way, shape, or form. And I'm personally pissed off that tennis is in phase 4, because I think tennis should be able to be played, because I'm being selfish and stupid about that. I guess that's my only thing. Yeah.
I think, one thing that upset me about, big box stores, I'll use Walmart as an example. A men's clothing store has to close, but Walmart can still sell pants and shirts and whatever else, I know it's not the same quality as, say, a Colin O'Brien's, don't get me wrong, but I felt that those stores should have had to close those certain sectors of their business. If the independent, if the independent guy couldn't do it, why can Walmart? I don't understand that. And I think that was extremely short-sighted by our political leaders.
There's been a bit of a sort of cosmic injustice with a lot of how this has played out, and Craig, you and I have chatted about it offline, where, I speculate that a lot of these relief programs will probably end up saving businesses that may not have made it through Q2 in a normal year, while other businesses that were fundamentally healthy might not survive because their revenues didn't drop enough to qualify for certain relief to offset things. And I think, it's a challenge when governments respond with broad brush measures. We're grateful that they have. I think that's one of the difficulties of all of this, that there's this sort of arbitrariness to things. I had a friend that remarked to me that the thing that's been so difficult about COVID-19 is every time something else had gone wrong in his business, at least it was his own fault, and he knew who to be angry at. That's certainly been my experience in my business as well. And it's quite frustrating when you're, confronted by this big existential thing that's completely beyond your control. And a lot of whether or not you're going to be positioned to get through it comes down to how strong your balance sheet happened to be, or whether or not you had pulled the trigger on a big investment at the right time or not. It's quite frightening from that standpoint. One question that came in earlier in the conversation. No, Dave, go ahead. I'll let you go there.
Well, and I'd say my frustration has been on the lack of understanding that the government's tests have been on understanding a business's way it's built, the fixed costs versus direct costs, things that can be overheads that can't be cut. A 10% cash flow reduction in some businesses is absolutely going to be crippling. And in other businesses, they can survive a 75% cash flow reduction because most of their expenses are really just cost of goods. That's a totally arbitrary way of doling out the funds that doesn't take into account really how businesses operate and the nuances of one industry versus the next, or one operator versus another, or like you say, large investments that were made in anticipation of growth, or a startup that doesn't have previous revenue to compare against. All of those things create a lot of frustration that people fall through the gaps because the program isn't designed it's designed to be fast and broad brush, not designed to catch the people that actually might need the money.
That's a great leaping off point to our third topic, which is around giving you folks an opportunity to share with us the gaps that you perceive, and certainly what you might think is going to be necessary to get businesses through beyond May or June, when these programs all are expected to run out. But before we go there was an earlier question that came in that I committed to getting back to, and that was around the reopening. As things start to reopen, and you folks have more people in your businesses and staff coming back, might different levels of comfort in terms of what that looks like for them. There was a question around sort of PPE, and I think it more broadly relates to, how are you folks educating yourselves and becoming understanding of what your obligations might be around sanitation practices in your businesses, particularly where, from my vantage point, a lot of that information around what my responsibilities as a business owner are still somewhat unclear. How are you going to access the materials you need, whether that's some level of personal protective gear for folks, certainly not what you'd see in a hospital, I would assume, but masks or that sort of thing. How are you folks navigating that, and how are you trying to figure out what would need to be in place for you to start to reopen, in light of the fact that some of that guidance is still pretty murky? And I know one thing that's come up with some of our friends in the restaurant industry and the previous discussion is even around whose responsibility is it to sort of police up these rules, and what happens when someone's breaking one of those rules? Who's responsible, and how far can you go as an employer to sort of address that concern? Thoughts from the panel on that? Who wants to lead us off? Yeah, see, this is a tricky one because nobody knows what to do.
That's HR's department. I'm more face to face with customers.
Yeah, look at you with your HR department there, Mr. Ford.
I think it's a great question, and it's something that probably is going to need some clarity from the government, because you bring up a really good point. Who is responsible ultimately for that call? I know here our store has probably never had so much disinfectant put into it ever in all the years we've been here, but there is, sooner or later, it can't just be on business to do these protocols. It's got to be up to the customers as well, I feel. So it's not all just the business owner, I believe, anyways. So
I would agree with that view. Others?
Yeah, I think now it's getting a little bit easier because at least you have availability of some of these cleaning supplies. When this was first happening, okay, you have to make hand sanitizer available to all of your staff and customers. Okay, point me to the place that has hand sanitizer in stock, or Clorox wipes, or whatever. So that's been a very difficult thing to have to work through. But the having access to that has definitely made it easier. So I mean, we've got hand sanitizer all over the place and just consistently wiping down. But from a productivity standpoint, it's a big challenge. Even just to have people, when you come to our shop, you've got a call to be able to have somebody let you in. Well, if we have, we've got to have people to answer the phones to be able to do traffic control, and then have other people to be able to service the customers and do it at a distance. So yeah, it's difficult, but it definitely needs to be done. And I would echo what Kevin says. I mean, we need to all be in this together. We can't just, point at the businesses and say it's your sole responsibility to make sure that everybody's safe. Yes, we have to do our part, but as consumers, when we're out, we have to, respect our space and respect other people's safety as well.
Thanks, Sean. In our last 5 minutes, I want to give the panel an opportunity to talk about those gaps, as I mentioned. But before we do that, perhaps the quintessential Saskatchewan canary in the coal mine question around optimism for an economic recovery predictably came in from the audience, which is, will there be a Rider football season this year? Thoughts? So perhaps we'll do this by quick show of hands. Who thinks we will see some level of Rider season this year? That's a 100% negative from the panel on that one. So let's hope.
I was a little more optimistic till I heard the news this morning when the Premier said it's going to be a very long time till we have larger gatherings. So I don't think we're going to have a Craven, a Rider season. It's going to be very, very different. And I'm even wondering what's going to happen with the WHL come the fall, to be honest.
And it's actually an interesting space on the insurance side. The businesses like, say, Craven or the Riders are likely carrying a business interruption insurance policy, and they need the government to cancel it on them so that their policy can trigger. If they choose to cancel it on their own, before any government shutdown or mandate is extending into their season, they probably won't collect on that insurance policy.
I'm not so sure that they'll pay that, because I think they're just going to, an insurance company is just going to say something like, this is force majeure, and that's the end of it.
And that's an interesting space too, about where their force majeure can be. It'll be a test that happens in court for sure.
Absolutely.
In some of our previous panels, the force majeure act of God provisions, both on insurance policies and contracts, generally did come up. And if folks have questions about that, I encourage them to check out some of those previous broadcasts. But one of the key takeaways there was that it's expected to be several years before any of the insurance dust settles, and probably a lot of class action type activity that ultimately shapes how they're adjudicated. It's interesting on the event space too. We saw a major event in the United States in Austin, the South by Southwest Festival, canceled very early in the pandemic, I think people will recall. And they didn't have pandemic coverage, and the economic impact to their city of hosting that event every year is equivalent to a city hosting the Super Bowl every year. So I mean, the consequences to the general economy of losing a Craven or a Rider season, I think, are pretty difficult to calculate, but they're significant.
My only comment on that is, if they can wrestle in Florida with no fans in the stands, maybe the Riders, the CFL, could play without fans in the stadium and just do public, like, TV broadcasts. Like, perhaps that is there. I know Major League Baseball is considering that type of thing. But I mean, that would only work with sports that have a significant television following, where the television contract is enough money. I don't know that the CFL is in that landscape like a Major League Baseball or the NFL.
There's going to be a big divide with that, I think, Craig. Like, I think you see leagues like the NFL, such lucrative TV deals that they can kind of figure out some of that type of stuff. But the casualties, the real hardships are going to be for the junior hockey leagues, those types of things where the gate represents such a major portion of their revenue. So I think it's going to be really interesting to see what happens in the fall. I know a lot of kind of talks going on with CI university sports and the impact that it might have on universities who've really been struggling with financing athletics programs and what the fallout of this could be. So I think that's going to be an interesting thing to keep an eye on.
Well, and it's not just the fans either. Like, the ticket revenue's gone, but you look at the Riders and the Pats. If you are able to have a TV deal where you're able to get some revenue from that, you've still got all the expenses of all your staff, all your training, all your everything. But in stadium sponsorships too. I mean, I know, I do some of that. Kevin does quite a bit of that as well. And if there's no, let's face it, I mean, you can love the Riders and love the Pats as much as you want, but if there's no people in the stands, it's tough to justify an in-stadium advertising spend. So there's other ways to support that, but it's tough to look at a place like even single city you know, for a CFL to say, well, let's do everything in, you know, in Saskatchewan. Well, there's 100 people on a, you know, between CFL roster and training staff and coaches. So I mean, you're 900 people that you got to find housing for X number of months. It's tough to envision a path to that.
Yeah, and the CFL just doesn't have the financial backing to have a season without any fans. Like their television deal just isn't strong enough. And you know, speaking to Sean's point too, is a lot of people that have sponsored a lot of these events, as in me, are going to have to really adjust that disposable spending moving forward when this thing does settle down. So I think the sponsorship that we've seen in the past is going to be very, very different, even in 2021, because it's just going to be on the ability to pay. It's just going to be that simple. So
appreciate everyone's comments there. And it is interesting how the rider season becomes a kind of a litmus test for consumer optimism, I suppose you might say. We're coming up on our time here. Just in the last 2 minutes, I did want to offer the opportunity for the panel to chime in on any gaps that you see right now in the current range of relief programs, specific gaps or challenges, and thoughts on what might be necessary in a longer term once the current programs expire. Do we think that what's been done is going to be enough? Is more going to be required? And if so, what do you think that ought to look like? Just open it up for closing comments on that theme, and we'll get people on with their day.
I'm interested to see the fallout of some of these applications, because there's a lot of honor system going on right now. So I did our apply for application for the wage subsidy for March yesterday, and nowhere does it even ask you to say what were your March 2019 revenues and what were your March 2020 revenues. It doesn't even ask for that. So it's on the honor system, and so, you know, if you interpreted something incorrectly and applied for it, you know, what are the penalties going to be for some of that? That'll be interesting, and you know, how are they going to apply different rules in different places if, you know, there's already Western alienation? So, you know, does the federal government look and say, oh, well, Saskatchewan is able to open up, we're going to limit in Saskatchewan and you know, keep things going elsewhere? I don't think so, but that's another interesting thing for sure.
I think
other thoughts, Kevin, go ahead.
I think a business moving forward, if you're an entrepreneur, would be starting a consulting business that can work with the audit committee from CRA, because I think they're going to have 7 years of a lot of work moving forward. That's for sure.
Craig and I are happy to field any calls on that subject following the session.
That's not what I want to be doing for the next 2 years.
Same here. Good God.
I think the biggest gaps right now in the programming are how long they'll be in place for, which we're unclear. They have an option to extend. We just don't know if they will or not. And as we already mentioned, people that are not paying wages as a business, then they are left out in the cold on this stuff. And if all it really is related to your wages, to Dave's earlier point, some of these programs don't really help you. So it's, I don't know what the government can necessarily do to help a retailer that is experiencing this loss of sales, because it's, there's only so much money in public coffers for us to pay for this stuff. So those are the biggest gaps I see right now.
It'll be interesting as well to see how many businesses actually start to demonstrate that they are at a failure point. You know, the personal numbers, the unemployment numbers tend to come in pretty quick after these sorts of events, and then the businesses tend to lag a little bit. And I wonder if the government's waiting to see how bad the fallout truly is. Other thoughts on gaps or challenges that might need to be met before we adjourn for the day?
I think I mentioned it, you know, the test that they're using, there needs to be some contemplation of other tests, other things that help businesses or industries that don't meet the current tests but are impacted by these things, whether it's by demand or the market has shrunk or whatever it is, that probably aren't as fast and as quick and dirty as the systems that they've implemented today. But if they don't, they'll see some industries get absolutely gutted because they don't currently meet the criteria that is set out by the government.
I agree with that point.
CRA is going to host a Q&A session on some of these topics, like when you recently acquired a business or businesses have merged, or some of those sorts of softer questions where currently you don't fit, Dave. They're going to try to address some of that. But of course, they can only implement rules that are put in place by the politicians. And so currently they're just going to clarify and say whether maybe there's a plan to move that ahead or not, I think.
Well, wonderful, everyone. We are a little bit over our time, a couple minutes, so I appreciate everyone hanging in with us as we explored the issues today. I want to really offer a heartfelt thanks to our panel for dedicating a significant portion of their morning today to joining us and sharing their perspectives. I think it's been really valuable. I've certainly got a lot out of it, so I really appreciate that. I want to encourage everybody out there to continue to follow the social distancing rules, because that's the best thing that's going to get us back to normal sooner rather than later, and our best chance of getting through this thing relatively unscathed. I also think too, just encourage everyone, and I know a lot of my colleagues in business have done a really fabulous job of keeping this attitude, but as much as we might lament that there might not be a Craven this year, or the rider season might not happen, in Saskatchewan right now, it seems to me we have an awful lot to be grateful for in terms of how we're doing relative to a lot of other folks. And I think the order of the day from my perspective, and what I encourage all of you to keep in mind, is that we have a lot going for us right now. We're a lot better off than a lot of folks, and it's going to be important to try to stay focused on the glass being perhaps half full versus half empty. So on that note, I thank my panelists. I thank everyone for joining us again today, and we look forward to seeing many of you next Tuesday at our fourth session. So thank you very much. Have a wonderful day, and thank you for joining us.
Cheers.
Thanks, everybody.
Bye-bye.